In today's training, I'm going to be walking you through how to model the sale of a business in Voyant, and this is when you've used our corporate module. There's a couple ways that you can do this. You can do the sale all in 1 year, or you can do a phased transfer. I'm going to start by showing you how to do the sale of the business all in 1 year, and then I'll do a secondary option where you can do it as a phased sale. We have a client with a law business and they own it as a sole proprietorship. I'm going to start by doing a what if plan where I show them how it would affect their plan if they sold it all in 1 year. And then I'll do a secondary plan where we show them the difference of doing it as a phased sale over the course of 5 years. What if 1, sell business at retirement, and let's create this plan. And we're going to go into company. We're going to open up the corporate module and we're going to go to ownership transfers. I'm going to add a transfer, and you can either use one of the existing event icons that you have on the timeline, or you could double click anywhere here in the gray of the timeline. Give that event a name like Goffman Law Sell. Set that as your start event, and then we could go on to finishing these items down here. But I am going to use her retirement event since that's when she wants to sell the business anyways, and I'm just going to set that as my start event for the sale. I'm going to change the type from gift to sale, and then I am going to select done, and we're going to click done to save, and you're going to notice a spike on the timeline the year after the sale of the business. That's to reflect some taxes that are going to be owed in arrears the year after she sells the business. And so I'm going to go into year view to give you a little bit more information about how this looks underneath the hood of the plan. So if we go into the year before the sale of the business, let's go over to the corporate tab and we can open up the details of this, and you can see that Melanie owns 100% of the business. If we go to the year she sells the business, you can see now she has 0% ownership of the business. You can still see the value of the company at that point, but you can see that her ownership of the business has been dissolved. If we go over here to the investment section, you can see that there has been a contribution into Melanie's cash account as her holdings has been liquidated. She's been paid out for the value of the company, and it's been moved into her cash account until we tell the software where else to put it. So you can do a transfer, or you can do a sweep into her brokerage account or any other account that you'd like to. In this case, I think I'd just like to sweep it into her brokerage account so that we get a better growth rate on this money. I'm going to go over here to the dashboard again. I'm going to go to her sweep account for the cash, and I'm going to go to sweep options, select the brokerage account, and all this is going to do is say that any big surplus funds like the sale of a business, an inheritance, or the proceeds from a house that's been sold is just going to sweep into this brokerage account. So I'm going to click done to save that, and we're going to go back into your view just to make sure that did what we wanted it to. And so now you can see that money was withdrawn from the cash account and contributed into the brokerage account. So now if we wanted to compare and contrast these two plans, you can see, looking at the two cash flow charts side by side, we can see the difference between them. We have a bunch of shortfall in the base plan, and now we have a fully funded retirement now that she sold the business in the sell business at retirement plan. If we look at the two different assets charts and we turn on our legend, let's just get rid of the corporate assets and look at her personal assets now. You can see the difference between the two plans. And let's go back to our dashboard and go to the base plan, and we're going to look at how the difference would affect her plan if she were to sell it in a phased transfer. Let's do the same thing but have her sell the business over the course of 5 years. I'm going to create another what if. So what if to sell business over 5 years? We're going to create this plan. I'm going to go again to my corporate section, open up Goffman Law, do an ownership transfer, add transfer at retirement. And we're going to do this rather than transferring all ownership. We're going to toggle that off. We're going to do a sale, and I'm going to transfer it over multiple years. So I'm going to toggle this on. I'm going to do it over 5 years, and we're going to do 100% of the business over 5 years. I'm going to click done to save and done again. So what you should see now, rather than one single spike in the cash flow, is that we're going to be paying out those taxes over the course of 5 years rather than in one single year. So you'll see a spike in their total need over the course of 5 years. And if we go into year view and scroll over to that year that the sale begins, we should start seeing some contributions into that cash account. Let's go over here to the corporate account. We should start seeing some decreases in Melanie's ownership percentage over the course of that time until her percentage of ownership is finally out of the company. And then also you'll notice there's going to be higher tax bills throughout those years as she's slowly paying out the higher capital gains rates for those withdrawals from the payouts that she's receiving from the company. Let's take a look now at the differences between these two sale options. So we can look at the what if 1 versus the what if 2, and I'm doing that on what if chart view compare plans. So we can see the two different cash flow options. We can look at the two different assets. I want to go back really quickly and again do the same thing I did in the other plan and make sure to sweep the proceeds from the business sale into that brokerage account. So I'm going to click done to save and make sure all of those funds are being swept into that brokerage account so that we can compare. And we're going to go again to compare plans chart view, and we're going to remove corporate assets, and we're just going to look at her personal assets, and we can see the differences between these two options. So you can see in the what if 2 sell business over 5 years, her personal assets at the end of the plan are higher than if she were to sell it all at once. And then we can take a look and compare and contrast the two versions of the plan for the cumulative taxes. So we can see the taxes are slightly higher in the sell business over 5 years plan. So you can look at the two different outcomes side by side and help your client come to a decision about which plan makes more sense for them in the long term. I hope that this has been helpful. If you do have any questions about how to walk through this for your client, feel free to reach out to us. You can always email us at support@planwithvoyant.com, or you can request support by simply clicking on the name of your client in the top right, hit request support, enter your question into the text box, and share client access. Thanks for listening.